What if the man behind the world's most addictive app was on the brink of bankruptcy, only to pull off the greatest comeback in tech history, turning a $700 billion wipeout into an eightfold stock surge in just 20 months? In the fall of 2022, Mark Zuckerberg stared down the barrel of Meta's apocalypse. The company, once a trillion-dollar juggernaut, had shed nearly three-quarters of its value in a single year. Facebook's user growth had flatlined, Instagram was bleeding at dollars to TikTok's viral frenzy, and the metaverse, a $10 billion black hole Zuckerberg had bet the farm on, looked like a delusional fever dream. Investors fled in droves, dubbing it Zuck's folly. Whispers in Silicon Valley painted Zuckerberg as a has-been emperor, fiddling with VR goggles while his empire burned. Meta's stock plummeted to $88 a share, its lowest in 7 years, erasing $230 billion in market cap from one brutal earnings call alone. Zuckerberg's net worth cratered from $125 billion to under $30 billion overnight. The boardroom buzzed with mutiny, even his co-founder Chris Hughes publicly called for breaking up the monopoly he'd built. But Zuckerberg didn't fold. He didn't pivot to philanthropy or cash out like so many fallen titans. Instead, he declared war on waste. In a leaked internal memo that November, he unleashed year of efficiency, a scorched earth overhaul that would become his masterstroke. No more bloated middle management or vanity projects sucking oxygen from the core. Meta axed 21,000 jobs, nearly 10% of its workforce, in waves that shocked the valley. Engineers who'd built the metaverse playgrounds were reassigned to add algorithms. Lavish perks like free laundry service at headquarters? Gone. The infamous Meta Waffle House food trucks? Scaled back. Zuckerberg himself took a 20% pay cut, trading his $700,000 salary for stock units tied to performance. It was brutal, unceremonious. Engineers got 10-minute Zoom calls with HR and a cardboard box for their desks. But it signaled a sea change. Meta wasn't a hobbyist startup anymore. It was a lean, mean profit machine. The math was merciless. Pre-efficiency, Meta's operating expenses had ballooned to $87 billion in 2022, up 39% year over year, fueled by metaverse R&D and endless hiring sprees. Reality Labs, the division behind those clunky Oculus headsets, hemorrhaged $13.7 billion that year alone, more than the GDP of some small nations. Zuckerberg had sunk $36 billion into it since 2019, chasing a virtual utopia where avatars danced in digital discos. Critics howled, why pour billions into a ghost town when TikTok was devouring Gen Z's attention? Apple's iOS privacy changes had already kneecapped targeted ads, slashing revenue forecasts by $10 billion. Competition from short-form video apps meant Meta's daily active users stalled at 1.98 billion, while ad prices tanked 8%. The company posted its first-ever annual revenue decline, a 1% dip to $116.6 billion. Wall Street's verdict? Sell, sell, sell. Zuckerberg's response was pure Silicon Valley Darwinism. Cut the fat, double down on what works. He slashed headcount from 87,314 to under 67,000, targeting low performers in a performance review blitz called Project Lightspeed. Layers of bureaucracy dissolved, managers managing managers were out, direct reports to engineers were in. The savings? A projected $5 billion annually, funneled straight back into growth engines. But this wasn't just cost-cutting for cost-cutting's sake. Zuckerberg layered in a cultural reset, borrowing from Amazon's frugality playbook. Weekly all-hands meetings became hardcore truth sessions, where he grilled VPs on metrics like at efficiency per engineer. No more metaverse moonshots without ROI projections. The pivot was visceral. In one infamous town hall, Zuckerberg admitted, "We've been spending like there's no tomorrow, and now tomorrow is here." Employees called it the Zuckening, a reference to the HBO satire that had roasted Meta's excesses. Morale dipped, but productivity spiked. Headcount efficiency, revenue per employee, jumped 18% in Q1 2023 alone. As the layoffs echoed through Menlo Park, Zuckerberg turned his gaze to the real money printer: advertising. Meta's lifeblood had always been the 3 billion monthly users scrolling feeds on Facebook, Instagram, and WhatsApp. But post-Apple, privacy walls meant less data for hyper-targeted ads, and TikTok's algorithm was luring away eyeballs with addictive Reels knockoffs. Zuckerberg's fix? Fight fire with fire. He supercharged Reels, Meta's TikTok clone, pouring $1 billion into bonuses for creators who hit viewership milestones. What started as a defensive copycat became a juggernaut. Reels usage exploded 25% quarter over quarter, driving 3.2 billion daily plays by mid-2023. Advertisers, smelling blood, piled in. Reels ads generated $10 billion in new revenue, offsetting iOS losses. Instagram's shopping features got an AI glow up, turning passive scrolls into impulse buys. WhatsApp, long a messaging sleeper, rolled out business catalogs and payments in 100 countries, siphoning e-commerce from rivals. The numbers started turning heads. Q1 2023 earnings dropped like a mic, revenue surged 3% to $28.6 billion, beating estimates. Ad impressions grew 5%, prices stabilized. Daily active users hit 2.04 billion, a record. Wall Street, skeptical after years of metaverse hype, began whispering comeback. Shares popped 25% post-earnings, clawing back to $180. But Zuckerberg wasn't done. He spotted the next gold rush, generative AI. While Sam Altman hawked ChatGPT and Google scrambled with Bard, Zuckerberg moved like a shark. In February 2023, he unveiled Llama, Meta's open-source large language model, trained on public data to dodge privacy pitfalls. It wasn't just tech flexing, it was strategic genius. By open sourcing Llama, Meta courted developers worldwide, building an ecosystem around its tools. "We're making AI accessible," Zuckerberg said in a blog post, "so everyone can build the next big thing on our platforms." The AI infusion hit ads first. Machine learning refined feed algorithms, boosting relevant content by 20%. Feeds now felt eerily personal. Your ex's vacation pics vanished, replaced by hyper-targeted sneaker drops. Advertisers loved it, click-through rates climbed 15%. Behind the scenes, Meta's data moat, trillions of interactions, fed AI models that predicted user behavior better than ever. Zuckerberg greenlit $10 billion for AI infrastructure in 2023, custom chips to rival NVIDIA's GPUs, cutting reliance on pricey hardware. By Q3, AI-powered recommendations drove 20% of Instagram's content, and Reels engagement soared. User growth reignited. Threads, Meta's Twitter killer, launched in July 2023, amassed 100 million sign-ups in 5 days, fueled by Instagram cross-posts. It wasn't organic love, Zuckerberg gamed the system, but it worked. Monthly active people across apps hit 3.19 billion, eclipsing TikTok's 1.5 billion. The stock market, that fickle beast, rewarded the metamorphosis. From the $88 nadir on November 7, 2022, Meta shares began a relentless climb. Q2 earnings in July 2023 ignited the fuse, 11% revenue growth to $32 billion, first profit beat in years. Shares doubled to $180. Zuckerberg's efficiency mantra echoed in every line item. Operating margins expanded to 38%, free cash flow hit $7.8 billion. Analysts upgraded from hold to buy, citing Zuckerberg's redemption arc. By October 2023, as Meta reported 23% revenue growth and a $16.6 billion dividend initiation, the first ever, shares pierced $300. Investors salivated over the buybacks, $50 billion authorized, retiring shares like clockwork. The metaverse? De-emphasized but not dead. Reality Labs losses trimmed to $3.7 billion quarterly, with Quest 3 headset sales doubling to 1 million units. Zuckerberg framed it as AI in R, teasing smart glasses that blend real and virtual worlds. Momentum snowballed into 2024. Q1 crushed expectations, 27% revenue jumped to $36.5 billion, ad revenue up 25%. AI integrations rolled out, chatbots on Messenger, image generators on Instagram. Threads hit 150 million users, chipping at X's dominance. Zuckerberg's personal touch shone. He hosted creator camps, doled out $5,000 bonuses for viral reels, turning users into evangelists. The stock? A rocket. From $300 in late 2023, it vaulted past $400 in March on AI hype, $500 in June amid dividend hikes. By July 2024, Meta initiated a 10% stock split, making shares more accessible. Trading at $550, the multiple from the low was over six-fold. Whispers of Magnificent Seven status returned. Meta joined Apple, NVIDIA and trillion-dollar club again, market cap at $1.4 trillion. But the pinnacle hit in March 2025, 20 months after rock bottom. Q4 2024 earnings lit the fuse, 28% revenue growth to $45 billion, AI ad tools contributing $8 billion. Shares exploded to $720, an eightfold surge from $90. Zuckerberg's net worth ballooned to $201 billion, vaulting him to fourth richest globally. Efficiency had birthed a beast, margins at 42%, cash hoard at $70 billion. He announced year of AI expansion, investing $20 billion in custom silicon and open models like Llama 3. Reality Labs turned a corner, Quest sales hit 5 million annually, our glasses prototypes wowed at Meta Connect. TikTok threats? Neutralized by Reel's 50% market share in short-form video. Regulators loomed with antitrust suits, but Zuckerberg's lobbying machine, $20 million in PAC donations, kept the wolves at bay. How did he do it? Vision laced with pragmatism. Zuckerberg, the hoodie-wearing wonderkin who'd built Facebook in a dorm, rediscovered his edge: iterate ruthlessly, acquire or copy threats, hoard data like gold. The efficiency purge freed billions for AI, turning defense into offense. He bet on what users craved: connection, entertainment, commerce, wrapped in smarter tech. No white knight savior, just a CEO who traded ego for execution. Critics who crowed Meta's dead ate crow as shares multiplied. Zuckerberg sold $2 billion in stock that year, funding his Chan Zuckerberg initiative, but kept his super voting Class B shares control intact. Today, as Meta eyes $200 billion in 2025 revenue, Zuckerberg's tale is textbook: crises forge legends. He didn't save Meta by luck or hype. He gutted it, rebuilt it stronger, and watched the world catch up. In a tech landscape littered with MySpace tombstones, Zuckerberg proved resilience trumps revolution. The stock's eightfold leap? Not magic. Just math, metal, and a man unwilling to fade.